So you want to be a hard money lender. I'm Rodney Miller, hard money partner. I loan money in Oklahoma City, Tulsa, and Dallas-Fort Worth. I get asked all the time from professionals like surgeons and engineers and people that have accumulated money over the years, how to become a hard money lender and how to get their money out there working in deals backed by real estate. And so I'm going to kind of give you how I underwrite loans and tell you how to protect yourself and just kind of give you the blueprint for becoming a hard money lender or a private lender. We use those interchangeably. So let's get started. How do you underwrite for hard money lending? Basically, I look at two things when I'm underwriting loans. I look at the borrower and I look at the property. Both of those are very important when you're underwriting loans. So let's start with the borrower. When you have somebody coming to you wanting a loan for real estate, you got to look at a few things to see if the guy's a viable borrower. So I run credit on all of my borrowers, and I want to know basically, does this person pay their bills? If the person has trouble paying their bills, if they have a lot of utility bills or mortgages or whatever that are slow pays or whatever, that tells me that they're probably going to be slow pay with me, or they're going to be a risky borrower. Doesn't mean that I won't do the deal, but I might adjust the loan to value to compensate for the risk of this person. So doesn't mean I won't make the loan, but I might give them less money and have less money in the deal, kind of protect myself a little bit if things go bad. Skin in the game. If a borrower is not willing to bring any skin in the game, I'm usually not very interested. I get a lot of people that come to me and they don't have two nickels to rub together. They want a 100% loan. I don't do that. And I don't know many lenders that do that. If you don't have two nickels to rub together, you're probably not going to get a loan from a bank or a hard money lender. You probably need to go back, save some money, then come back to us when you have some money to put in the game. Skin in the game is huge for hard money lenders. We want to know that you have something to lose if the deal goes south. Experience is another thing we look at with the borrower. Not necessary 100%, but if the borrower has zero experience, we might be a little more conservative on the loan. We'll still loan money if the deal looks good and they're into it right and they seem to know what they're doing, but experience plays a large part in it. If you don't have experience, we're probably going to loan you less on your first deal just to mitigate our risk. You know, a lot of these deals I talk about is risk mitigation. We want to make sure that we are not, our job is not to take risk on your deal. That's your job. Our job is to loan you the money and stay safe and keep our principal safe. So another way I vet the borrower is I look at their numbers and see if their numbers are accurate. So if a borrower comes to me and they say, I'm buying it for this, the rehab amount is this, and this is what the ARV or the after repaired value is after I fix it up, I'm going to look at those numbers and see if they add up. So I'll jump on to Zillow and I'll look at their ARV, their after repaired value. If they say it's 120, but nothing is sold in the neighborhood in the last 6 months for more than 80, I'm going to know that they don't know what they're doing or they're way off. And so I will, and I try to counsel them on that. Like, hey, don't listen to your realtor. A lot of these guys say, well, the realtor said it's worth this. I tell them, don't ever listen to your realtor. You go and you verify. Then you come to me after you verified it and you can give me some comps or whatever. So if they don't really have a good idea what the after repaired value is, then they probably are new and probably don't know what they're doing. And they're going to get in trouble if we don't give them some guidance. Same thing with the rehab budget. If they think they can rehab a house for $20,000 and we go out there and look at it and it needs $40,000 to hit the ARV that they're trying to hit, they probably don't really know what they're doing and they need a little coaching, a little bit of help. And we like to coach people and help them, but those are ways we evaluate the borrower. So let's jump to the property. So first off, we want to be the first lien holder on the property. So we want to make sure that we are the first mortgage or the first deed of trust on the mortgage. That's key to lending. You want to make sure you're in a good position and you're safe. We don't loan more than 65 to 70% of the after repaired value. That's extremely important in lending. We won't want to get too high. The higher we get in loan to value, the more risk we're taking on. So we kind of cap it out about 70% loan to value. We're going to look at the condition of the property and where the property is located. If the property is in a bad part of town, or if the property requires a lot of rehab and the person doesn't have the experience, we're going to tell them to do an easier paint and carpet deal and don't take on this huge rehab. We get deals to where the rehab amount is more than the purchase amount. Let's say they're buying it for $75,000, but the rehab is $80,000 to get to a $250,000 ARV. That's a huge rehab, and that's a huge undertaking. So you need to have a lot of experience. You need to have a lot of skill and transactions on your belt for us to loan on something like that. That kind of goes back to the borrower, but it's also the property. We're looking at the property and the rehab budget. We always escrow the repair budget. So if you need $30,000 for repairs, those are going to go to escrow, and we're going to give those to you after the work has been done on the property. We might divide your like rehab budget into 3 specific areas. And let's say the roof and the countertops and the flooring's done. We'll give you, $15,000 of your rehab budget, but you'll have to put the money into the property. That's the key. We want to make sure the money goes into the property. And we learned the hard way. If we get the money up front, sometimes the money goes into another project. We check back, they haven't even started the project, and that could be a real big problem. Never skimp on title work. When you're doing these deals, you want to make sure that the title work is being done by a title office or a title company or a good attorney that is putting this deal together for you. You want to make sure you get title insurance on these deals, and you want to vet these deals through a title company. Make sure you're the first lien title holder. There's no federal tax liens, nothing on it. So you want to make sure it's a clean title and you're the first position. That's huge. Finally, you want to lay eyes on the property. You want to get out there and look at the property, or somebody you really trust needs to get out there to look at that property. Super important that you lay eyes on the property, look at the rehab budget, and make sure that, number one, that the property is there. It doesn't have any huge structural issues that they didn't account for, because some new rehabbers will leave stuff off or they won't catch something. And you want to make sure that you're not setting them up for failure. You want to make sure you lay eyes on the property, you lay eyes on the rehab budget, you look at the ARV, and then you put it all together, and it's got to make sense. If it makes sense, you move forward. If it doesn't make sense, you got to adjust the amount you're lending, or you've got to cave on the deal all deal. If it doesn't make sense, you've got to readjust your amount that you're lending, or you've got to not do the deal. So these are my basic criteria for lending. And so if you're going to loan money, it's simple, but you got to make sure that you're protecting yourself and you do it right. If this sounds like a lot to you and you want to get into the hard money business, we sell some of our loans off to investors, and those are the surgeons and the high net worth people that want to get their money working together. We still deliver a double-digit return. We do all the work for you. You can buy half or partial loan off of us and we're in it together, or you can buy the whole thing off of us. So if that's an option for you, hit me up, Rodney Miller, Hard Money Partner. Click on the link below and we can talk about our investment opportunities too. So I hope this helps. Rodney Miller, I make loans in Tulsa, Oklahoma City, Dallas, Fort Worth area. We're making loans like crazy. We also go out into the smaller towns in Oklahoma. So hit us up if you need a loan. Hit us up if you want to invest. Rodney Miller, Hard Money Partner. Thank you.